All right, welcome everybody. Your host for today's episode of the podcast is not Chad Harris. Instead, we have a great guest, Chris Mayfiled out of Phoenix, Arizona. He was interviewed and got to tell his story a few episodes back. I believe it was episode 31. And he is back today to be the guest host and facilitate the interview. So welcome, Chris.
Hey, Chad, thanks for having me. It's always good to be around you since the first time I met you in February back in Oklahoma City, pre-COVID, when we were all just hanging out, breathing on each other.
Feels like a long time ago.
It really does. Yeah, Chris Mayfiled, you can find me on Instagram, KGREI. Love what I do. Or just, follow the interview. Chad interviewed me a couple weeks ago. Go check that out. Blessing just to get to talk and converse. And I'm excited about this because now I get to be the interviewer and let you be the interviewee. So Chad, tell us a little bit about yourself in the sense of how did Chad Harris get into real estate investing? What's that story?
Well, my story, I was used to real estate investing. My parents had rentals. I grew up working on rentals, weekends, after school, summers before football practice. I was always around rentals, but I always saw the negatives. I always saw the tenants and the headaches and the maintenance. And so later, when I was going into college and my parents kind of had the idea that I would someday take over. And I kind of said, it's not really what I want. I'm going into teaching. I was passionate about teaching and went to school for teaching, eventually went overseas as a missionary. And as I was preparing to go overseas, that's when my father was getting ready to retire. And he gave me that, last opportunity, that last pitch of, hey, do you want me to hold on to any of these for when you get back? And I had him, I really thought we were going to Kenya for good. And so I said, no, just sell it all. He was ready to retire. I said, you need to work towards your retirement. Didn't want him to hold up his plans on my sake. And so I went to Kenya. We had 2 kids at the time, and then our daughter was born there. And after 4 years, we came back, and our youngest son was born. And I had been, the last year in Kenya, I had been, it's one of those things in a high-stress situation. I needed an outlet. I needed something to think about outside of Kenya and the work in Kenya. So I started reading books. I could get a digital book to, what was that called? A Kindle? I don't use those anymore, but yeah. And I was reading real estate books and just thinking about it again from a new perspective, from an investing perspective. And so when we came back after the 4 years, our youngest son was born, and I had actually bought a couple properties completely passively from Kenya. And then he was born, and he had a bunch of health issues with Down syndrome. He was born with Down syndrome and had trouble breathing. And we had a few months of just limbo where we weren't sure how he was doing. Every week was a different doctor's appointment and nobody knew really what was going on. And then finally he had to have a trach tube put in. And once he had that put in to help him breathe, he couldn't fly. We couldn't return to our work in Kenya. And so I had a couple months where I really had to figure out what I was going to do next, because we were living in a house that had been provided for us from a supporting church. We'd been loaned a car to use, and all of our income was the missionary income. So I wasn't going to have income, a place to live, a car to use, anything. So
there's a desperate moment.
That's right. That's right. You go from what would I like to do with my life to we got to make something happen and get some survival or security. It's more security.
So would you say was that your motivation as this transition was happening to get into real estate? Because you could have, being a pastor, being a missionary, you have many traits, great people skills. You could have fallen into any single type of employment or starting a business, what was the motivation in real estate?
So yeah, I had options, but at that point in my life, I had been feeling stress that my kids had had a really rough life. I had been involved in this great work, and they were involved too. You know, it was the family was involved in ministry, but for me, the work was exciting and great. And for them, I weighed on me this internal stress of what their life was like. And that just got heavier when Bo was born, and we had more stress and worry about how his life was going to turn out, and knowing that that impacted our other three children as well. And so when we couldn't return to Kenya, it was just a breaking point for me where I said, no matter what it cost me, I was going to provide a great life for them. And I didn't really care what I had to give up or what I had to do or what I had to persevere through. I was going to do something great for them. And for me, it seemed like real estate was the way to do that. So once we made the decision to stay, once we knew we were gonna stay, I just went full force into it and really never looked back. So, and another part of that was that I was tired of living away from my family. I wanted my kids to be near my parents and my wife's parents and their extended family. And that was all part of providing something good for them. So.
Yeah. So what, as you're transitioning into real estate, what real estate did you really kind of, obviously you have a backstory rentals, so it's natural to be comfortable. Is that where you solely got involved? I mean, because you're coming out of a situation where you don't have tons of capital.
Yeah, I didn't have much capital at all. I didn't have income. I didn't have really any way to borrow money from a bank or get a loan from a bank. And looking back, it would have made probably more sense to wholesale or gone into flipping or something where you make, your cash up front, or you get chunks of cash quicker. But I was familiar with rentals, and that's what I went into. That's all I did for the first 3 years of my investing was rentals. And my father had mentioned to me at some point that he had read somewhere that you could borrow money or basically get loans from people using their retirement accounts, self-directed IRA. And so that's really what I did. I just did the Burr technique, and I had become very good at raising money because of raising support for ministry. And I'd become very familiar with that process. And so I just started to use those same techniques for raising money from private investors or private lenders.
So a couple questions. Number one, what did others around you? Let's get a little bit personal and intimate, because I think that's what really people want to see. What are others thinking about this move? Like, obviously, number one, your wife, but two, the closest people around you. So wait, you're going to not be a missionary, and now you're going to go into real estate. Obviously, they knew your situation of what was taking you out of Kenya, but what was their response to going into this type of an endeavor?
Yeah, I was thankfully, first off, I was very blessed with, Kara was very supportive. My wife was supportive from day one. She really believed anything that I really pursued, I could succeed at. And so, there were many times in the early years where I didn't know how I was going to pay my contractors at the end of the week, didn't know how we were going to come up with the money for many different things. But she was never critical of me or questioning of me. She was always supportive, and it always worked out, thankfully. That helps, right?
Yeah.
So as far as other people, I think my parents were supportive. because they had rentals. They were more familiar with real estate. I think a lot of people really just believed I could do what I set my mind to. I think that's how I was able to get investments from private lenders. They had seen me say that I was going to raise, $500,000 for the work in Kenya and moved to Kenya for 4 years. And I did it. And I was going to do this work in a difficult environment. And I did it. And I think I had a track record of doing what I said I would do. But that said, there were plenty of people who asked, that seemingly innocent question of, well, what are you going to do if it doesn't work out? Or how long are you going to give this a shot before you get a job? Or, those seemingly innocent questions that when you're the one receiving them just feel like a knife in the back or a serious criticism. And so for me, I would always answer very positively that somebody's making money in real estate, my pat answer, and I'm going to be certain it's me, no matter what, right? That no matter what the market is, if it's a good market, a bad market, somebody in my area is going to be making money. And so if I put in the effort, if I work hard enough, if I spend the time on education, if I hustle, I can make myself be in that group. And so for me, looking back now, I say there was never a moment where I said I wasn't going to turn back or I questioned it. But that being said, in the day to day, there were plenty of days where I was frustrated and struggled.
Well, there's definitely something to unpack here. So you're coming out of missionary, which means you're raising support. So there's really no net worth there, right? So here's a question I have for you, and I think tons of people would want to know this because I think tons of people are probably paralyzed in this situation of you don't have any money, yet you're going to go to these what we would call successful, wealthy people and say, trust me with your money, even though I don't have any money, because I've got this plan of what I'm going to do in real estate. So 2 questions, probably. The first one, how did you mentally get over that hurdle of it doesn't matter how much, you got to charge this hill. So how did you beat that in the mind so that you could go ask people, hey man, I've got something you should be involved in, even though I don't have any track record?
Yeah, definitely. And I think that is a struggle for a lot of people. So for me, it all really formed in my mind during raising support for ministry. So when I started, I really struggled. I thought, I've got this amazing ministry. We're going to be drilling wells and providing irrigated gardens for kids who are hungry. And I should be able to raise money very easily. I know all these Christians and churches, and I have this need. So I went out and I told them about the need and talked about what I was excited about for the work. And really, I raised a little bit of money, but not that much happened. It was kind of frustration on my part because I couldn't figure out why Christians who I knew cared about that, filling that need, wouldn't necessarily provide for the need.
Yeah.
And it took a while for me to figure that out. But what I realized was obviously they do. The churches and the individuals I was speaking to, they care and they want to be involved. They want to address the needs. They want to serve Christ. They want to help the poor. And so if they weren't doing that, then I was getting in the way. There was something I was doing wrong. So it took a while for me to just take responsibility for that. And once I did, I realized that obviously they do. They want to be involved. They want to serve. They want to help the needy. And I have a way for them to do that. I just needed to present an opportunity. I just needed to get myself out of the way. So it wasn't necessarily about the need in the field, but it was about the opportunity for a church or a believer here in the States to be involved in a work in Kenya and a vision for what their involvement was going to do. And once I switched just how I presented the work, then I could raise money very quickly. And
Well, and that goes to, like you just presented, there's a need, but people don't give the need, they give the vision. And when you began to show the vision and the opportunity, it was like, oh, okay, there's a way I could see this. I could be a part of this. I mean, you know what I'm saying? There's a clean drinking water need worldwide that I believe America could solve in one Halloween. That we just didn't buy Halloween candy for one Halloween. If you look at what just America spends for candy just on Halloween, I think we could cure the world's clean drinking. We got to present that in the right type of vision to get movement. So you get through that mental hurdle. So then take us through kind of the first, if you can remember, an opportunity where you went and said, all right, I'm going to go present this opportunity to someone right now. I found a house. I want to do this. Did you find a house and then go find the money, or did you just go find the money?
so, yeah, I remember the very first meeting, where I sat down and gave that pitch. And really, I already owned a couple houses. So I had bought a couple houses from Kenya where I had saved money. I wasn't making much, but you really couldn't spend much where we lived either. So I had saved some money, and I knew my dad enjoyed buying houses. My brother-in-law was trying to do property management and build a portfolio. So I said, hey, I'm looking in these blocks of this type of house. If you find one, I'll buy it. And he could manage it. Trying to just help everybody, get people involved. So I had a couple of houses. And I didn't see the connection between raising money for ministry and raising money for real estate. I just started telling people that I was going into real estate and I was going to start buying houses. I didn't know how I was going to buy houses. I just knew I was going to be buying houses. And it was the father of a friend of mine, his mother, or I should say, his mother and stepfather. And they said, hey, we're interested. You want to come by and tell us about it? I thought, okay, great opportunity. And we met, and I told them what I was doing. And they were basically, I just said, I'm buying rentals really cheap. I'm putting in work and I'm renting them out. And I told them, basically presented the opportunity that if they were interested in getting involved, I would give them a mortgage, just like the bank. And it would be on a house that I already owned. I was going to give them a mortgage on that. And they said yes, which was eye-opening, because in all honesty, it was surprising. It was like, I'm making the pitch, but I'm not really sure that it'll go well. And then I will never forget, he said, after we had agreed to terms and everything, he said, I've wanted to invest in real estate for a long time. I'm grateful for the opportunity.
That's cool.
And it was like it clicked.
Yeah, that's cool.
Opportunity. So just like with the ministry, there are people investing in all these different assets, and they want to invest in real estate, but they don't know how. And so if I, just like with ministry, if I can put them into an opportunity and give them a vision for how that will affect their finances, how it will affect communities, how it will affect residents' lives, then I believed it would be easy to raise money. And so I just started telling everybody, because it was the fact that I'm not asking for money. It's not me. I'm sharing this opportunity. They have an opportunity to do what they want. I'm just the one who knows how to help them invest in real estate. And so I shouldn't be shy about it. I just need to tell more people. The more people I tell, the more I can help and serve. And so that's where it just took off.
So work us through numbers, right? Because a lot of people are like, okay, this all sounds cool, but kind of tell me how it works numerically. You don't have to give us addresses or anything. Just give us kind of the parameters of an actual deal, right? You find a house, you're going to buy it, right? And are you buying it and then going now still looking for the money, or now how just kind of take us through like an actual numbers deal without, you don't have to give us any addresses.
Yeah. So early on, this was 2012, 2013 was when I started, and I did pretty much only burrs through 2015. And the basic numbers were I was getting fairly small loans, and there were just a mass of foreclosures in our market, which is typical of the national market at that time, but especially Dayton was a really depressed area, really depressed rental market. And in those areas that I was used to working in with rentals, C neighborhoods, I could fairly easily pick up houses that needed a bunch of work for, 10,000, 12,000, something like that. And then once they were fixed up and rented out, they'd be worth 25, 30, 35,000, depending on where they're at. So they're not big numbers. It's nothing massive. And so like the first loan, I think, was 10,000. So
you go to a family and you say, hey, I'm going to buy this house. It's 10,000. So I'm asking, really, you're saying, here's the opportunity. You give me a $10,000 loan, just like somebody that goes and gets $100,000, $200,000, $300,000 loan for their own personal house. I'm coming to you for a $10,000 loan for this particular address.
Yep, that's it.
And then what are you gonna? What do they get for that?
So the way I started, I wouldn't say this is the best way. I know much better ways now, but I was, I was just trying to make it right any way I could. So the way I did it was I offered 10% to start, 10% interest, and I would have a pro forma for the house and say this is about what we're going to cash flow, and I would, deduct money for management. I'd deduct money for maintenance, which is a wise thing to do, even though I was the one managing it and I was the one doing the maintenance in the early days. And then I would pretty much match the payment to the cash flow on that property, which is not at all wise. And at the time, it seemed wise because for them, they would get their money back quicker, right? Which is what most lenders want. But what I realized later was that makes it much riskier because my cash flow is basically non-existent on that property. So, so the way I did it was I would do interest only for 1 year, and then the payment would switch to amortized and would pretty much match the cash flow of the property. So that gave me 1 year where I had good cash flow. If I could renovate it and rent it quickly, I would have really good cash flow because of a small payment. And as long as I replaced that property in a year, everything was good. So that meant that I had to just churn through properties. And then when I would refinance it, usually there was a good chunk of money that, if I put 20,000 into the property, with purchase and rehab on those early ones, then the loan, when I refinanced it with another private lender, would be maybe 25.
So what I just heard there was you use a lender for the 10 to buy the house. Real quick, who do you use where do you find the cash for the rehab?
So the rehab, some of it was, when I first started, I think that first one, we still had our house provided. We still had a car. I really didn't have too many expenses. And so I was just putting in sweat equity and whatever materials. And a lot of the houses, they needed the pipes replaced because all the plumbing had been stolen. They needed some drywall repair and paint, but it wasn't, to get it rent ready, it wasn't a massive amount of money that needed put into it. So that's how I started. After that, everything was from the refinance. So if those first ones, if I refinanced with a private lender for 25, maybe I pulled 5 to live off of, and then I had 20 for the next house. So that would pay.
And so like there, so you would go to a private lender, a person you knew, most likely, buy the house, but then when it came to refinance, which I would guess would be somewhere between 3 to 6 months, usually every time, you would go not to a bank, you would go back to another private lender, giving them an opportunity to make money on their money.
Yes,
So you weren't
completely.
doing any
So,
institutional financing.
correct. So everything was private lenders. So, and that was all the way through. We had more than 50 properties when we got our first bank loan. So everything was private money until that point. And it just grew, like finding deals. It was just talking to enough people that I could find enough private lenders that I knew some liked short-term investments. Some liked investments where they didn't touch the money. They wanted it long-term and they wanted an amortized payment, right? Because they're in retirement or nearing retirement and they want cash flow. Some of them were using retirement money. And so they didn't really want the money back because it's just going into a retirement account. They just wanted it to earn a good return and be secured by real estate. And so I was good at presenting opportunities to people. And I was also good at figuring out creative ways to structure the deal so that they could get what they want and I could get cash flow, because all I needed was cash flow.
So on that, couple questions start bursting out. Number one, where are you going? What was you kind of had a plan of what you wanted to do. Then what was your plan, your marketing strategy, if I can use that word, even though that's probably not what you would call it, to go find lenders? What did you do to get the word out that Chad's buying houses, and if you would be willing to lend to him, he'll give you a good return?
So I really just use the same techniques as support raising. So, initially it was my very close circle. Anybody who knew me well, I would bring it up or I'd tell them what I was doing. I had some people actually ask me because they had heard what I was doing. And then I just kept increasing that circle. Once I had talked to everybody who was very close to me, I talked to, people that maybe they suggested or I hadn't talked to in a little while, but knew me. And eventually I even sent out emails to a bunch of people who knew of me, knew my family or my wife's family, and just initiating that conversation.
What did you get? Did you have any mental hiccups there of what are people going to think if I send this out, because they all know me as a missionary and now I'm sending it out as a money hungry real estate investor? Did you have that mental?
Money hungry real estate
I know
investor.
you're not. I know you're not, but I know that voice inside starts saying, what are these people going to think when they open this up?
Yeah, I did. But I think it went along with, there's always that voice. If you're trying to do something big or something out of the ordinary or something nobody else is doing, there's that voice in the back of your head saying, you shouldn't be doing this, or it's not going to work, or what are people going to say? And you just have to go through it. I believed in what I offered. I believed I was presenting an opportunity. I believed I was going to succeed. And so I wasn't shy about it. There was that voice there, but I just went ahead anyway. So I would definitely encourage anybody else. When you're hearing that voice, don't think that means you're doing something wrong. Just accept that as part of the process. You just got to go through it.
That's a good topic down the line for us, is how to quieten the voice, how to drown out the voice, how to stop the voice. I don't know what we'd call it, but everybody has that. Everybody has that, like, okay, I'm hearing like 50, 100, 500, a whole network of people that are doing this, right? So I know it can be done, but then when people rewind and put it to them, all of a sudden that voice comes up and they're like, now you've got to go do it. And you're like, you're worried about what people think. And you really got to be healthy in understanding that it's not necessarily a bad thing for the voice, but if you can't overcome that voice, you sure as heck shouldn't be going out and asking people for money, And so That's interesting. So where do you sit today? That's kind of how you started it. What were some struggles early on that you had to battle? And then what does it look like today, the way you go out and do hard money? I mean, private money.
Well, some, early struggles. There were plenty of struggles along the way, like building anything, you know. Um, I struggled. I couldn't do the work fast enough. I wanted to grow faster, and I was doing all burr. And the burr process is a fairly slow process. You have to put in a lot of rehab. Takes a while to refinance it out. And so I was hiring guys. Initially, I hired guys to work with me, even though I didn't have enough rental income for me to live off of. It was just a leap of faith that I'm going to go through enough deals that the money from the refi will pay for their salary or their expense. And I'll benefit them by giving them guaranteed 40 hours and giving them continued work. And so that was a struggle, learning to manage people. Eventually, I switched to hiring contractors that didn't work with me, but they worked independently. And that was a big mental hurdle because, I had to let go of a whole lot of things.
Yep.
And I still have the first guy who I hired who was completely independent. He still works for us. And I'm grateful he had patience because, there was some tension there many times through those years. So that was a struggle. When I got to about 45 units, I had a serious struggle where I just couldn't manage it. I didn't have
Yeah.
any of the tools to manage the tenants and the numbers. And so I was having sellers call. And just from the message, I knew it was an area I liked. They were in a bad situation. They needed help, but I couldn't, like, to me, just talking to them, it was that's just going to put another burden on me. That's just another tenant. That's just another toilet I can't deal with anymore. And so I was missing a whole bunch of opportunities and wasn't really living up to my vision for the business
Man, I
at
wish I'd have
that
known you
point.
then.
So, and really, that was only year and a half ago. Wasn't that long ago. But thankfully, I had talked to somebody who had many more units, and I reached out to him and just kind of in a humble way saying, I know you've gone through a whole bunch of this already. Is there any way do you do coaching, or is there any way I could hire you so that I could just benefit from your experience and you could help me put in those systems that can get me past where I'm at? And I think he had 120 or 140 at the time. And I am, immensely grateful that I did. It was a very awkward thing for me to do because I was completely opening up and just saying, I got a major problem. Is there any way you can help? But within 6 months, the tenant problem smoothed out because we built a system. I hired an assistant. Cash flow got better just because there weren't as many headaches. I wasn't spending money to try and put out the fires like I used to. And everything smoothed out, and then we were able to grow again. So that was a really pivotal point.
Let me ask you a question real quick. I didn't ask it a while ago. So you buy it, you borrow the 10, you buy it, you do the refi, another private lender. So in institutional financing, if you're going to do a refi, you're right. It takes a while. It's not necessarily sometimes a bad idea. You just have to, be ready with all the financials and the BPOs and everything. So how did you structure a refi with a private lender? Because it seems to me that you would have a lot more flexibility there because really they're doing it based on the house performance, to know they're going to get paid. So how did you set up a refinance with a private lender as opposed to institutional financing?
Yeah, good question. It was much quicker. There wasn't a seasoning period. It was, you know, and really they didn't care what I bought it for and what I put into it. It was just, I would show, once I rented it, I knew what the market rent was. I would show a pro forma, of what the rent is and what some comps were, what the value was. And when I was, in the early years, I was doing 80% loan to value and comparing it to a conventional loan.
Yep.
And my lenders were fine with that. It was more just a question of knowing me. My numbers were conservative. I was doing 80% loan to value, but my value was low, and, everything in my mind was fairly conservative.
So
So,
how did then, okay, so they come in, they like the numbers, but were you setting it up on a 30-year, or were you doing like a 5-year, 30-year amortization? Like, how long was their money going to be displaced in your care?
yeah, so there was no set way. I wish I had like a pat answer. you know, it was, I'm trying to think, the first few loans, well, actually, most of the loans were always interest only for 1 year and then amortized for some period. And some of those small loans might be amortized for, 4 or 5 years. And it's just a hefty payment in the early years. Eventually, I was doing some bigger loans for 10, 12-year amortizations. For a while there, I got real big on the numbers really worked well, 8%, 8 years. I don't know why. At that time, the deals I could find. And that
Yeah.
was easy to promote.
Right.
So I just told everybody 8%, 8 years, no matter what amount you want to lend, I'll find a deal that fits it. Kind of presenting that opportunity that I'll do whatever legwork I can to help that get into the deal. And
So
so I went
currently,
that way.
okay, so
Currently,
currently, do you have more money and looking for more houses, or you have more houses and looking for more money?
well, so yeah, real quick. So currently, the way I structure them changed, and I realized I had thought that the lenders really wanted their money back, um, until I had a lender that I was doing interest only on, and I think it was a 1 year note, and I paid him back like the 6th month, and he was disappointed. And there was that question in my mind, like, why is he disappointed? So I talked to him about it, and he explained that it's not money he really needs, it's money he invests. And so just like buying a stock, you don't want that stock to start selling itself off each month. He would want his investment to
Yeah.
stay in that stock. So I thought, well, that makes complete sense. It's kind of like eye-opening for me. And so I said, hey, I'll find you another deal. Let's do it again. And realizing that, the private lenders, they don't want their money back. They just want it secured, and they want to know it's getting a good return. So that gave me freedom to change how I structured it. So I
Yeah.
did interest only. I did started doing no payment, where the interest just accrues into the principal for a while. And it really gave me flexibility to do a whole bunch of things. So right now, pretty much I'll do 15-year amortization at 6% or 7%, depending on the deal. Interest only loans, that we just keep extending the balloon, or no payments for 1 or 2 years, and then it rolls into interest only or amortized. So, and with that flexibility, it just became immensely easier. And then right now, so recently, I had this, like, I don't know what you would say. So I was good at raising private money. And when I started, I didn't have any income. It didn't matter what I did. There was no way I could go to a bank and get a loan. And once I started to make money, I actually went to the bank and tried to refinance our house. This was maybe like 2017. It wasn't that long ago, right? And I had this idea that I got a bunch of money coming in and I have a whole bunch of equity in my house. I'm raising money for deals. Why don't I just pull out some of this equity in my house? It seemed like a no-brainer till I turned in my taxes for the loan application. And the guy looked at me real puzzled and asked a few questions. And I tried to explain how my business operates. And he said, okay, yeah, this should work. And then a month later, he wanted, big stack of paperwork. And then a month later, he wanted another stack of paperwork. And then 6 months later, we're still not getting an answer. And I thought, this is insanity. I'm just going to go raise the money from somebody who wants to lend me the money. It's not like I'm the beggar going to the bank, And so I kind of put bank money out of my mind and just said it wasn't worth the time or energy. And that was kind of a weakness. And recently, earlier this year, I thought, I'm going to go and just bundle up some properties and do a cash out refinance. And so I did that process, got a big chunk of money that, that was equity converted to cash so that we can buy more properties. And then a really amazing thing happened. So that first loan was 6 properties, 5 of them had a loan. And the bank actually liked that the houses in the bundled loan had mortgages on them because their combined payment was going to be less than the current individual payments. So that gave the bank security, right? So we did this refinance and all the investors got paid off on those houses. Well, I had already called them and I'd talked through the process with them and explained to them that it wasn't that I didn't want to provide an investment for them. It was just that I needed to restructure some of the debt. And once they receive their payoff, if they still want to continue with an investment, I'll give them another investment. I didn't want to harm their investments in any way or cause them any problems for something I was doing. And so they understood that, and 4 out of the 5, when they received their money, they, just reinvested it with me. So one of them was just at a different stage in life, and that happens.
Yeah.
They had somewhere else to put the money. So it was eye-opening again because this is a good deal. I get all this money from the bank, the investors reinvest their money, and so we're continuing that process. Right now, it is very easy to raise money. It is unbelievably easy to raise money because the stock market is so volatile. Nobody knows what's going to happen in the next few months. And so anybody who is investing money in the stock market or any other asset, they want some kind of return, but they don't want the volatility of the market or the risk of their principal in the market. And so it's very easy to offer this opportunity into real estate where they can diversify some of their portfolio, get a good return on their money, and have it secured by real property.
Yep.
So we are in a spot right now with the business where we have a lot of money to invest, and it's just a struggle to find those deals.
So are you, on that real quick, are you open or are you looking to invest outside of what you normally do? Like if the return is good and there's that security in the real estate, I know it's not your property, but would you invest with another investor who has a property if you know that you can show the returns that you need?
I honestly haven't considered it. It's a great idea.
Well, you have the properties. You have the financing, and if you don't have the properties, which a lot of times happens, you start getting on this good roll of raising capital, and you're like, man, but I got to find deals, which we'd love to help you find deals, but there's already some deals out there. Like for us, Chad, one of the things we're trying to do is we love wholesaling, and always want to have it. but there's something about, you know, you start cherry picking and taking some of those properties where you're like, it's a smarter investment, like you say, to go the slower route of a BRRR, because in the long term of the tax benefits and the mailbox money and all that, it's just smart. Not to mention the refinance, you know, you can make a wholesale fee in the refinancing of that property. So it's something to think about. So that kind of leads me into then, what are your goals now?
Yeah, my goals. So, you know, about 6 months ago, I was in that transition where suddenly I had a bunch of time freed up because I built the management system, assistants, I'd gotten the people in place to really do the property management well. So Arrival Homes, our real estate business, was going very well. And what my heart and my passion is for is teaching. And so I started True Wealth Investors, and that was just a side business with the podcast and a course and coaching. And it was really a way for me to have an outlet for that passion to teach and help and encourage others. So I have goals for both. You know, with Arrival Homes, we have a management system that could easily handle 80 units or more. And so we're looking to grow our units. Recently, we did a deal where we bought a house all cash and then resold it on contract to a homeowner. And I loved that deal. You know, I didn't meet them in the screening process because my assistant handles all the applications and screening and approval, but I met them at the closing table. And it was awesome. They were talking about the house and what they loved about it. And it was an old historic house, had a barn in the back, and the animals they were going to raise in the barn, and the difference their kids' life was going to be because now they have a house with a yard compared to what they were coming from. I loved that deal and knowing the
Now,
impact it would make in the family.
real quick, that deal is you took the property down, right?
Yep.
And then instead of, if I'm hearing you right, instead of there being a bank, you're the bank, right? And they're going to buy the house from you, like a seller financing type opportunity, correct?
Similar. Yeah. So I bought the property all cash with a private lender.
Yep.
So they provided all of the money. The private lender got a mortgage on the house, just like a bank. They knew what I was planning with the house. And then we sold it on terms to a seller where they put some money down. We did a little bit of work to the house, just making sure it was, you know, ready to go. It just needed some paint, carpet. And then, yeah, so they bought it on contract and the buyer pays us monthly.
Yep.
And it really worked out for everybody.
It's
Investor was
like
very happy, buyer's happy.
you're getting a passive income, but now you're no longer a landlord. So when something breaks, they're fixing it themselves.
Right. Yeah. So you get a little bit less each month, but you don't have any of the expenses of management, maintenance, any of that.
Yep.
So yeah.
Cool. And you're providing, people forget this, you're providing affordable housing. I mean, that is a problem that we have in America. And so there's knocks on real estate investors, but there's a lot of positive they're doing. They're trying to go in and make homes that are bringing neighborhoods down. They're trying to refresh and give them new life. And like you said, a family comes in and says, our kids have a yard now. We're going to have a farm. We're going to have, I mean, you've changed this person's life. It's not just numbers. You know, I tell people this is a relationship business. There are numbers involved, but this is highly relational on every single part. The getting the lender, getting a buyer, contractors, you know, it ultimately all comes down to relationships.
Completely. Couldn't agree more. Yeah.
Okay.
Definitely.
So where are you heading now? Like what's it, what do you, you know, where do you see yourself in, I don't know, 2 to 3 years? I mean, you've got tons of wisdom. You've got synergy. I mean, you've got two things. Real quick, I just, because I love it. Like, how did your company get the name Arrival Homes?
Yeah, so Arrival Homes, I don't know. I was researching synonyms to success, I think. And came across the phrase like "you've arrived,"
Yeah.
and I thought, hey, I kind of like that.
Rival home. Okay.
And so I went with the name, and now like our videos for showings, we do virtual showings, and then we got this digital explosion of the logo kind of thing, and we have the logo, and then the like phrases, "Stop searching, you've arrived." Kind of like that.
Cool. I
So
want to see. I want to see one of those. Please give me a link to your digital promotions. Maybe even attach it to this podcast. I think people would want to see that.
sure,
So,
definitely.
what do you
Sounds
see
good.
for 2 to 3 years? You've got that set. It sounds like you can go up to 80 homes. True wealth is something that you seem to have passion for, and taking everything that we're talking about and passing it on to others. So you wake up in 2 years, what's going on then?
Yeah, so I want us to continue to build our portfolio of rentals. We have embedded in our rentals, a portion of the rent goes to the ministry in Kenya. The rentals support ministry in Swaziland. And so I love the idea of building that portfolio and just increasing the impact. I love dreaming of what impact that portfolio could have, much less there's obviously I want income and I want a lifestyle for my kids and my family, but beyond that, I want this big impact. And I know that it impacts the communities we work in and the houses we renovate, and that impacts the families here. But I want that to have a great impact in Africa as well. And so that's what I envision in a couple of years with the rentals. True Wealth Investors, I'm really enjoying it. And we're kind of on the cusp of just building it. So I'm excited to see what will come from it. But I love teaching, sharing, encouraging others, helping them, build a business that supports their dreams. And so I envision, having more coaching clients, building a mastermind, and eventually I would ideally love to see where we have different seminars
Yes.
in different locations around the country, and we can just pour in a whole bunch of value to people and really help jumpstart their businesses.
Well, and you said that right there, and that's something that you and I have gravitated towards, and that's helping people, giving them wisdom, advice, direction, resources to get started. What's a couple of things right now? They're like, oh man, I want to be where Chad's at now, but I'm nowhere near that. I don't know the first thing. What would be just a couple of things that you would pass on to say, here's a couple of things you could do to find out more to get started in real estate, or a couple of things that just says, hey, get started?
Yeah, kind of first steps. I mean, definitely try to, build your education, your knowledge, listen to podcasts like this one, other podcasts, read books. We are living in a great age where you can get a whole bunch of information very easily. So that's a very easy first step. I would say get around other investors, because a real benefit when you hear that nagging voice kind of telling you can't do it or questioning whether you can do it is being around people who have done it or are doing it, and just getting that camaraderie of other people with similar goals. Definitely clarify your goals. So you need to know where you want to be, why you want to get there, what impact is it going to have on your family if you accomplish it. And once you really nail down your goals, know where you want to go, just take that first step to get there. You don't have to see the whole thing. You don't have to know how it's all going to work out. Just know the direction you want to go and take the first step. And when you accomplish that, take the next step, and it'll work out on the way.
Yeah, I couldn't agree more. I saw it in three components. I mean, one, educate yourself. If you don't have money, there's plenty of free resources out there. That's number one. Two, find a coach, find somebody who's doing the things that you like, that you relate to. And then three, I think that's where most people struggle is you just got to jump. You just got to go do it. I kind of have that picture of, I have a couple of images, but one is you're kind of on a track, kind of going the way everybody's going, but you really kind of want to see what's in and on the other side of that forest. And so sometimes you just jump off the track with a machete and you just start figuring it out. you know, there's this beautiful spot that you want to get to, but you just gotta kind of, carve out your own trail. And I think the first two people get, but what I sense is that they get to that point of it's time to jump, and they don't want to jump. And to me, the first two are great, but I educated myself so much out of the desperation of needing to make money that I just had to go do a deal and learn. And I learned a ton on that first deal because, and then the second thing I learned was every single deal is different. Even though it's a house and a real estate transaction, there's personalities involved. There's deep problems with the house or whatever, but just carving that path or working through the process to get to the end on that deal is just like, creating this whole business. So I couldn't agree more that you got to educate, but you also got to jump.
Yeah.
So,
and if you, just a word of encouragement, I really appreciate what you were saying, and just what's coming through to me for those people who just struggle with that jump, that first step, and it feels like this giant leap, then, get somebody to walk beside you. You just have to take the first step. The second one's easier than the first, and the third one's easier than that. Just get somebody to help you through that first step.
Yeah.
So, and whatever it is you need, figure out how to get it.
Yeah.
Because you need to just fix in your mind that you're going to succeed. You're going to do whatever it takes to get where you want to be. And yeah.
I got two more questions. One is why. I think we've heard it. Obviously, you have a passion for your wife and kids and creating a generational wealth for them. And you're not only doing that by finances, you're giving them in the education of watching their dad do all of this, which who knows how many of those children are just going to go right into that same business with you. Obviously, there's a passion for the ministry and the needs of Kenya. Is that pretty much when you wake up, what drives you is family and then the opportunity to provide for those people that you started early on in Kenya?
Yeah, my primary things, I remember early on I laid out what would it take in my life to feel secure, because everything was up in the air. What do I need to nail down so I feel secure? And then what do I need to nail down so I feel comfortable? And then what would I need to truly feel wealthy? And in there it was having enough income that I don't worry every month how we're going to make it, that my kids have certain things. And so for me, the end goal, the true wealth is I have enough income to provide for my family, and not just right now, but generationally. And I have a lifestyle that I really want and cherish, and I create memories with my kids, and I have adventures with them, and we have things that we share a passion for and work towards together. And true wealth has to include an impact, that I'm leaving my community better. I'm leaving the world a better place. And for me, that passion, goes to Kenya and goes to ministry in Swaziland. And that's where I feel called to be involved. But I think we can have an impact wherever we're at. We're all being used in different ways and have different opportunities. But for me, that's what it comes down to. That's my why.
I'm definitely sensing that with your ministry background and my ministry background and our heart for people, that, man, there's something there in investigating in all of our networks of creating something that's a vehicle to get these resources to other parts of this country and other parts of the world, because there's a desire for me to help some things going on here in America. And then I have a mentor in ministry that is doing ministry throughout Europe and just getting the gospel to go forward. And man, there's something there because of what you and we've been in that world, and we're in this world, and we know those guys. We know anybody in a real estate world that's successful tithes or gives or understands that if I don't look to help other people, my wealth is gonna shrivel up and die. And so I think we need to create a vision there too of helping these guys say, hey, you don't know where to put your money? here's some opportunities. Has nothing to do with us. We don't benefit whatsoever financially, but we know some needs where your success could really help. And then even get some of those guys to go with us and set foot on some of those places. That would be just a joy.
Yeah, man. Now you're talking. I agree. Yeah, I'm with you.
That was the whole reason I got into this. I just got to find the right team, and it's all about collaboration. So last thing, obviously, if somebody just randomly ends up at this podcast, that's awesome. Go find a lot of things about you as far as getting connected. But what are some places that they could go to read up a little bit more about you and what you're doing, or even if they just say, man, that guy, I want to invest in him or with him. I want to reach out to him and find out how I can make some of my money work in his real estate transactions. How would they find you?
Yeah, you can find me all over the place. You know, we have a website, truewealthinvestors.com. Best way to contact me is through email through that website, chad@truewealthinvestors.com. You can find True Wealth Investors on Facebook, True Wealth Investors on YouTube. You can find me on Facebook. Any of those routes, you'll get to me. So if you have a question, want to reach out, definitely be more than welcome.
Here's what we're going to do. We're going to swivel the desk back to you because it's technically your podcast and let you take us out of here.
All right. Sounds good. Well, I appreciate everybody listening. I hope you got some good content. I hope you got some encouragement and really some ideas to help get you where you want to go, because I know real estate is a great tool to build your dream life, and whatever I can do to help you get there. And Chris, I really appreciate you coming on. I really admire you and the work you do. And I know you just really have a heart to serve. So I look forward to working together on additional things in the future.
Absolutely.
All right. Well, for everybody listening, keep building your dream life one door at a time.